Welcome to Money Convos, where we discuss personal finance and investment tips. We're committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. All right then, let's head into today's conversation.
Hello everyone, thank you for tuning in today to this session of Money Convos. I hope you're all doing good. We're going to be talking about income tax today. It's an interesting topic, and every now and then it comes up when some people realize that their business activities are getting taxed. So we'd like to get into it. And today, to help us with this conversation, we invited Tax Law GH. Michael is here to talk to us, to give us some perspective. Let us get into understanding things about taxes, things we need to look out for. So it's going to be an interesting conversation. Michael, are you there?
Yes, I'm here.
Great. Thank you for honoring the invitation. So I was just going through your LinkedIn, and I found some really interesting things. And I like the way you were breaking records over there. And just to let our audience know the expertise behind who is coming to be talking about these issues. You know, tax law has to do with law, it has to do with accounting, it has to do with finance. So it's good that we know that whoever is speaking to it is of good repute, is well learned. See that Michael was a valedictorian when he was in University of Ghana graduating. When he finished the CA, he had the highest score, the youngest to charter at 21, a jointly held accomplishment. It's just go through your LinkedIn. I'm quite impressed. You know, you did some years in PwC and currently at M-Pharma as a global head of investor relations. I also see that you like to educate people. So this brings a synergy between us. We are here to educate people, and we would love for you to educate our audience on taxes today. So thank you once again, Michael Sianlabi, for joining us.
All right. So thanks for the opportunity. I'll call it that. So I think we can start. I just didn't expect the ambush at the beginning on the introduction, but I guess it's fine.
Yeah, if it were on video, we'll see that you'll be blushing, but I guess that was part of the effect. Yeah. Okay, great. Dennis, I see you in the audience. Feel free to come up, join us. So yeah, let's get straight into why are we taxed? Like, what are taxes? Why did we be subjected to taxes? If you could just give us a quick overview of that before we even get into certain nitty-gritty.
Okay, I'll try to be as basic as possible because I'm not speaking to accountants, I assume. I mean, we have a few of our accountants and consultants and lawyers here, but I assume I'm speaking to the ordinary Ghanaian, right? So it'll be very, very basic. So accountants here, please forgive me if it's too basic for you, right? Okay, so government needs to run the state machinery, right? Government needs to keep the country running. We need our roads constructed. We need our schools. We need subsidies on different products, different goods. Government has to give us what we call public goods and services. To do that, they need money. There are two primary ways government raises funds to run the economy. They either go out to borrow or they tax their citizens. Very high level, right? So in economics, government can decide to go and borrow. Borrowing has its advantages, but as we all witness in Ghana today, we are where we are because we did not use that tool too well. We overborrowed. So the other option is government can tax its citizens. So the primary reason government taxes its citizens is to raise revenue. I say primary because it's not the only reason. So the first one is government needs money. They need revenue to run the state machinery. So they decide to tax us. Now the taxes also have implications. So not to go into the details of economics, like taxes can depend on the tax type they choose to go for. It'll have different impacts on the citizens, on the economy, expansionary, all of those theories and the cons. But the first thing is to raise revenue. There are other reasons why taxes are imposed. I'll take just one extra one, which is to influence behavior. So for example, in Ghana, there's something called excise duty. If you choose to smoke, your tobacco products are taxed. They have a really high excise duty, over 100% on the product, right? It is supposed to discourage consumption of tobacco products. But the question is, will it? those who are addicted will still buy it regardless, right? So economics will tell you there's something called elasticity of demand. People will still demand it whether or not you impose certain taxes on it, right? So the first and most important reason is to raise revenue. There are other reasons like influencing consumer behavior or discouraging the consumption of certain particular products. There are other things like supporting infant industries in Ghana, for example. Recently introduced, we have a policy where locally manufactured sanitary towels will be zero rated for VAT. It's supposed to protect infant industries in Ghana. So if you're a company doing sanitary towels locally, your VAT output will be 0%. It's supposed to make your products cheaper than imported, right? So many other reasons, but I think for the purpose of this discussion, I'll stick to revenue raising for the government and then influencing consumer behavior. So we don't go too much into the theory of taxation. So I think I'll leave it there.
That gives us a good idea, raising revenue and influencing behavior. So then I'm curious, can any kind of income or any kind of exchange of money be taxed? Is there a limit to which the government will say, you know what, this kind of activity, we just can't tax it?
So I think we've seen a lot of, especially the influencers, the YouTubers, they feel they are being attacked. So here's what the law says, right? Every income is taxable. And I'll go on a tangent and even say, if a prostitute goes out during the night and she makes money during her night out, that money is taxable. Even stretch it further. If an armed robber goes out there and goes to rob someone, that money he makes is taxable. You see, the tax law does not care about legality. The GRA will take their tax from the robbery and then hand you over to the police to deal with you. There are two different rules in taxation, right? So what is taxable? Everything is taxable unless the law has specifically exempted you from tax. So there are a few income items, and surprise, surprise, the income of the president is exempt from income tax, right? So he's one of few people or persons who have exemptions. The income of a student who is in school gets a scholarship, that scholarship income is exempt. Let's say you are in Presec. I don't hesitate to say this, the best boys school in Ghana, and you win the National Science and Maths quiz, and you are given your prize money. Something like that can't be said to be exempt, right? It is income, but you got it from a quiz sponsored by the government. It's a prize money. You are still in school, right? So certain incomes are exempt from tax, but it's a very limited list, a very short list. Apart from those specifically exempt income, every other income is taxable. YouTube, influencing, TikTok, you name it, they are all taxable. So let's start from that angle. Everything is taxable unless you are on the specifically exempt list. That makes the conversation more like, okay, it's not like there's a secret list of what is taxable and what is not taxable. There's just a short list of exempt items. Every other income, once it's an income, it is taxable. And I'll go on to mention that our law gives us three main categories of income: employment income, business income, investment income. So ask yourself, what I'm doing, what I'm earning, where does it fall? If you're an employee, you work for a company, it's clear, employment income. You are self-employed, probably business income, right? Then there are other incomes you get from investment, dividends, interest, royalty, right? So everything is taxable unless clearly exempted. I think that should be a good place to start.
Wow. Michael, at this point, Jerry should be chasing all of us. Because I can see some people in the audience, the side gigs that they've been doing, it's not easy. So, well, we all have to be on high alert and start filing our taxes. While we talk about the different types of taxes, let me just expand. This may not be an economic activity, but what about gift taxes, inheritance, just transfer of property or money?
Okay, so our law does not have an inheritance tax regime like some jurisdictions do. Like we don't have a separate IHT, as it's called. Like there's no inheritance tax regime clearly, but we've got a gift tax. So once again, if your boyfriend buys, so the ladies here, your boyfriend buys an iPhone, what's a new one? 15, I guess, right? 15 Pro Max for you, your birthday. It's a gift. It's taxable. What is the tax? The tax will be on the value of the phone. So you should find, I know you don't have the money, but find the money and go and pay to GRA. So the law has been amended recently. So you can elect to have that gain tax or that gift tax at 25%. So go and find the value of a 15 Pro Max and go and give GRA 25% of it. Will you do it? I know you will not do it, but that's the law. So gifts, we have a special regime for taxing gifts. And really, there's no limit on what is exempt, what is taxable. Anything you get from someone for which you give no consideration, you didn't offer value, it was given to you for free, is pretty much taxable, right? So that is for individuals. If a company or you're a business owner and someone gives you something, a donation, a gift to your business, you add it to your business income and it is taxed as part of your business income, right? So that is there. We have a special regime for taxing gifts, but it's subsumed within the employment, business, investment I mentioned earlier. So let's just remember that we have three main categories of income. Everybody here, it's either employment income, business income, or investment income. And when we are trying to tax you, the tax law will try and figure out which category or class of income is going to fall under, right? So yeah, that's about it.
Yeah, that's interesting. I think we all owe a lot. The bill is racking up, Michael. You should have told us to bring a pen and paper to record all the bills that we owe. So yeah, and you said something about offering consideration. What does that mean? Does that mean if somebody is giving us a gift, we have to do them a favor in return to avoid the tax?
Okay, when I say consideration, the accountants will say when you offer something of value. So, for example, if you're selling your car today and you sell it for 200,000 cedis, no, that's too low. Probably what, 600,000? That's the consideration the person buying will pay you for the car, right? So it's anything of value given for something. So you don't have to necessarily offer consideration. But when I say a gift is something for no consideration, the person gave you the iPhone and you didn't pay for it. So it's for zero consideration. That's what I meant by that.
Okay, cool.
Yeah.
And just bringing it very lay. How about pocket money?
Okay, so I like to link, you see, it's called an income tax, right? So there should have been an income. So let's look at it from this angle. You are going to school, your mom gives you money for your upkeep. Is it really income you're making? Was there an economic activity? So you see, our law does not specifically say pocket money is exempt, but let's think about it from the practical standpoint. What economic activity did you do for which you are getting that money? Really nothing. You were just born and your mom felt like giving you money because she has to take care of you. So you didn't have an income. Is it employment income? No. Is it business income? No. Is it investment income? No. You see, so some incomes would not be taxed because it's not income, or some transfers, as I'll call it. We have e-levy today, which really is not a tax, if you ask me. I mean, it's not an income tax, right? Whatever they want. It's a transfer tax. It's a tax on electronic money movement, right? So that's outside the scope of income tax. But pocket money to your child, for example, will not clearly be deemed to be an income, right? There is a rebuttable presumption here, but that's it. If your child works for you, right? You have a business, you have employed your child, and your child is paid a salary, then he's made income because he worked for it. It's called earned income. But if I give you pocket money because you're my child, there's no income earning activity there. I don't know if that's clear. That's that part of it. Yeah.
Yeah, that's clear. So the principle exists, and with any activity we are curious about, we have to compare it to the principle. Great. Thanks for sharing that. So there are some types of taxes that come up every now and then. I just want to throw a few at you to see how you'd explain these. So value-added tax, like why is that charged, and why should we care about it as consumers?
Okay, so VAT is all around us. No matter what anyone says, I don't pay tax, I'll not pay my tax. You are paying VAT. In fact, the fact that you are on this X space today, all of you are paying VAT as you speak now, right? So embedded within your mobile data, whatever you bundled to join this space, is a tax called communication service tax. It's an indirect tax. The data bundle you purchased has VAT embedded in it. So it's been done already. So once you are here, you've paid VAT, all of you. VAT, communication service tax, NHI or get fund levy, right? So these are called consumption taxes. The only way you don't pay VAT is if you don't consume, because almost everything around you is what we call VATable. There are just a few things that are exempt. So for example, you go to the mall, you want to go and buy chicken, right? If the chicken is locally grown, so listen carefully, the chicken is locally grown, the chicken is maybe frozen, right? there's no VAT. There's not supposed to be VAT on that. But imported chicken is vatable. So it's the same chicken. You might think it's just chicken, right? But imported chicken will bear VAT. Then the locally made or the locally grown one will not have VAT. So it goes to my point that we have VAT on every product except a few. So, for example, if you take table salt, there's no VAT on table salt. If you go for mosquito net, there's no VAT on mosquito net. If you go to the pharmacy, you want to buy Panadol, there's no VAT on Panadol, right? So specifically exempted items do not attract VAT. Apart from that, every other thing has VAT. If you buy a laptop, they'll charge you VAT on it, right? If you buy a phone, they'll charge you VAT. If you buy a car, they'll charge you VAT on it. So it's called a value-added tax. It's supposed to be a tax on value addition, but in Ghana, we've distorted our VAT regime. We now have what I'll call it a sales tax regime, where there is VAT, then we have the National Health Insurance Levy, Ghana Education Trust Fund Levy, and the COVID-19 levy. And I don't know why we are charging that in 2024, but we still have the COVID levy with us from 2021 all the way till now. So you pay these taxes because you are consuming. But you can see I've mentioned 3 other levies because VAT and the levies are like Liverpool. They never walk alone, right? When you see VAT, you should see the levies ordinarily. So you see VAT, you should see National Health Insurance Levy, Get Fund Levy, COVID-19 levy. They are kind of like brothers working together. So VAT, in summary, is a tax on consumption. Only way to not pay it is to not consume. Once you buy that bottled water, Belacqua, Voltic, whatever, there's VAT on it. You didn't have a choice. You can't tell the person, let me buy the water and I won't pay the VAT. You have no choice. I saw something on Twitter. It's now called X, right? Not too long ago, someone said they went to the restaurant and they didn't want to pay for the VAT. And I'm wondering how practical that would be. It's part of the price of the food, you see. So only way to not pay VAT is to not buy food from that particular place, right? So it's really a tax on consumption. It's levied on so many products around us. Only a few are exempt from VAT. I could give you the long list: education services, health. If you go to the hospital, that service is not vatable. If you go to school, your school fees, there's no VAT on that, right? So many other items are exempt from VAT, but majority of things around us will be vatable. So I always say that the principle is assume it is vatable unless you go and check the list of specifically exempt items. Assume that thing is vatable. There's VAT on it.
Okay, that's interesting. All consumption is vatable except where
almost all, yeah.
Oh, yeah, yeah. So, assuming I'm doing a small business, I have a side hustle, I'm trying to grow my business. How do I get to put my products on an exemption list? Or where do I even first or find out where the list of the exemption?
Okay, so for anyone interested, there is the law. I mean, everything I'm saying is from a law somewhere. So tax is strictly based on law. So there is a law called the VAT Act, Act 870. It's been amended so many times. But if you go to the first schedule of the law, it has a list of items that are exempt from VAT. Right. So once you go to that particular first schedule, it tells you that, okay, this is exempt, that is exempt. So it tells you tubers. If you go and buy yam, raw yam grown in Ghana, it's exempt from VAT, right? If you go and let's say you get, for example, items for the disabled, wheelchairs, braille for the blind, all of those are VAT exempt, right? So locally made textbooks are exempt from VAT. So if you're a business person, you don't have control over what becomes exempt. It's by government policy strictly. So if whatever you are dealing in is not on the exempt schedule, then you have to charge VAT. But let's not see VAT as a tax the company or the business bears. It's like when you are charging your price to the customer, add VAT and let the customer pay and collect for the GRA. So it's not your tax. You're only helping the government collect. Unlike income tax, which is levied on your profit, or what we call chargeable income, VAT is really, you are only helping the government to be a tax collector in that particular case. So if you are selling, like you're in the business of selling, let's say, ladies' handbags on Twitter, on Instagram, you charge VAT as part of the price of the handbag. When you get your money, roughly 30 days after the month has ended, the last working day of the next month, go and give GRA their roughly 21.9% in terms of what their VAT. That is your job to do. You take your money, obviously, and then you charge government VAT for them, if that clarifies. So it's not your tax to bear. It only makes the price of your goods or services higher because you're helping government collect their tax.
So because once you're doing any kind of business, selling a product or a service, you've become a tax collector for the government.
No, so to clarify that, actually, yes, because there's something also called withholding tax. Okay, so let me go back to let me fill in all the gaps here. So let's start from you are doing a business. What kind of registration should you do? I think if you go to that angle, it makes the whole story easy to tell. What should you do in terms of registration? I suggest everyone here doing business should get your business registered. Whatever business structure you decide to go for is up to you. You have broadly three main choices, right? You could either be a sole proprietor or a sole trader. You could go for company, where you incorporate your company, or you could do a partnership with your friend. In terms of the tax implications, a sole proprietor and a partnership will pretty much be the same because the tax will be on you, the individual. So your rate will be based on the individual rate. It starts from 0, ends at 35% for incomes exceeding 600,000 roughly. If you go for a company, the company is not you. You are separate from the company. So company income tax rate is 25% approximately. So the company is taxed separately from you, right? So first thing you should do is choose your business structure. What do you want to go for? And I advise majority of us here, if you're doing business, go for a sole proprietorship. If you are starting, you're not sure of your idea, start with a sole trader, see how it goes before you move to company, because the compliance burden and compliance cost for companies is really high. You need to get an auditor to audit your financials. Sole trader, there's no such clear obligation, right? You need an office, you need a company secretary, you need directors. For a company, sole trader, there's no such obligation. It can be just you, and you wake up in the morning, you do your business. So that's the first thing. Register your business. Now, based on the registration you go for, there could be tax incentives, tax implications, tax obligations, compliance requirements. So you look at the compliance requirements for that. Then you ask yourself the next question. What I am dealing with, should I charge VAT? In fact, there's another indirect tax called excise duty. So for excise duty, for example, you all see these days, if you have any bottled water around you, Belacqua, Voltic, check the top. You see this sticker. Who has noticed that? You notice that there's a sticker on top. Some of us peel it off because we are bored, we want something to play with. It's called the excise tax stamp, right? So any product you see with that stamp on it is an item that excise duty should be paid on. So let's say you start a business, you want to manufacture canned malt. You want to compete with Beta and then Malta Guinness. You would have to also comply with excise duty because you've gone to manufacture a product that attracts excise duty. But let's say you are on Instagram, you sell mobile phone cases and covers. It's not excisable. So you just have to deal with your VAT and income tax and you're good to go. So the kind of business you decide to go for will attract certain tax obligations for you. I hope that clarifies at a very high level. So think of a business structure that has its own tax implications. The area you decide to go into also has its own tax implications. One business may have some implications that another one will not have. If you decide to make bottled water today, you would have to pay both excise duty, VAT on your product. Your colleague who is just making shoes for manufacturing, shoes are not excisable, but you have to pay VAT. Your friend who decides to make items for the disabled has no VAT implication, has no excise duty implication, just income tax. So you can see three friends, different businesses, but different tax obligations. So that is how you should think about it. Your activity has tax consequences. The question is, which consequence will it have? There's no business I can say is 0%, like there's no tax at all. Even people who we call free zones, they don't pay corporate tax, but they have withholding obligations. They have to pay their employee taxes, right? So that is how you should think about activities and taxation.
That's interesting. So to anyone who's trying to do a side hustle or trying to do a business, Michael encourages you to register it in whichever form. But as you are doing your feasibility, you're checking to see if this is a business that will be profitable, you need to factor in those taxes, especially in our states, in our situation in Ghana where the taxes come out of the price. In other jurisdictions, there's the price and then they'll say asterisk before taxes. Then the prices get slapped on top. So you'll be doing your math in the shop only to realize at checkouts that is way higher. So you definitely need to put that in to see if your business will still be viable after all these taxes. That's good to know. On investment income, right? What are the different types of investment income? When I receive dividends, sometimes I see an 8%, but when I do treasury bills, I don't see any 8% being taken away. Like, what's the whole taxation thing around when you make investments?
Okay, so if you recall, when we started, I said every income was taxable unless it was on that list of exempt items, right? So you mentioned investment income, treasury bills. So those are exempt from tax. Government wants us to buy treasury bills. As individuals, if we buy T-bills from the government, the interest we get, especially if you buy from, let's say, mutual fund, right? EcoBank, EDC, Stanbic Investment, Data Bank, those investment incomes are exempt from tax, but dividend is not exempt. It's subject to an 8% tax, like you rightly said. But even that dividend, let's assume you got the dividend through a company you own, right? If your company owns 25% or more of the paying company, the company paying the dividend, that 8% does not apply. It's exempt from tax. So you can see the general rule is dividend is taxable. But if a company earns dividend income from another company where they own 25% or more of the voting rights in that company, then that dividend is not taxed, 0% tax. That same dividend income. But you, an individual, you'd always bear the 8% tax when you receive dividend from a resident company in Ghana. You mentioned the investment income. If you have investment income from, let's say, any government security, that would typically be exempt if you're a resident individual. Like you're in Ghana, you invest in treasury bills, for example. Such returns are typically exempt from tax, right? Other investments, it depends. There are some that our law has not thought about yet. Think about it, for example, if you have investment in Bitcoin, right, and you sell your Bitcoin and you make a gain, our law has not thought about taxing Bitcoin. But can we say it's exempt from tax? No, because our law has not specifically said it's exempt from tax, right? So that you should find a way to tax. Those who do Forex trading, is their income exempt? Far from it. It's very, very taxable. But how do we tax it? They need to go and self-declare that they are doing a business or they've invested, right? So that is going to be the angle you could take it from. If you have investment property and you have tenants paying you rent, right? You are supposed to pay income tax on the rent income you are making, right? It depends on whether it's residential or commercial rents that you have. So all these income items are taxable. The only one that will be exempt from the list we've mentioned will be your treasury bill and government security investment. There is one that was exempt but is now taxable. It's if you were investing in a Ghana Stock Exchange listed company before December 2021, the end of the year, all such gains were exempt from tax. So let's say you bought shares in MTN. You bought the shares at probably 20 cedis per share. I don't know the price now. And you sold it at 50 cedis per share. You made a 30 cedis cool gain, right, per share. If you made that gain before December 31st, 2021, you wouldn't pay any tax on that gain. But today, if you made that same gain today, that gain will most likely end up being taxed at 25% if you are an individual, as in those of us here on this space, right? So you can see that even for the exempt items, some of them stop being exempt after a while. It depends on the tax law drafters. They specifically wrote the Ghana Stock Exchange listed securities one to die or to expire by December 31st, 2021. So it means after that, any gain you make on a GSE listed share is taxable, right? So investment income, once again, assume is taxable unless you can find it in the law as clearly listed as exempt. That should be a good way to start. But one thing that is guaranteed is that if you invest through a mutual fund or a licensed investment house in Ghana, you know your income is exempt from tax. So an easy way to think about it is if you want to invest in government securities, you want to invest in government bonds, anything, go to the licensed people, EcoBank, EDC, Stanbic, Data Bank, Fidelity has investment accounts, Blackstar Advisors, all of those people. Once you can confirm they are SEC licensed, then whatever returns you make from that investment should be typically exempt from tax. That's how to think about it. If you invest through them, you don't pay any tax. That's how it works.
Michael, your list gets longer. People are owing too much at this point. GRE
Everybody
will
owes
come for all
tax,
of us.
so Yeah. I mean, what they are doing now, right, is so there's this thing called residence in taxation. So in tax, residence does not mean what we understand resident to mean. So you can say you're a resident of Achimota, but tax uses residence differently. So if you're a Ghanaian resident taxpayer, doesn't mean you are living in Ghana, but you have some nexus or connection to Ghana. Your income wherever earned globally is taxable. That is why I see the YouTubers have to pay tax in Ghana, because you're in Ghana, you're earning income from US viewers, South African viewers. Yeah, it's still going to link you to Ghana. What Jerry is doing now is there's something called the Voluntary Disclosure Program, where they are actually getting information on foreign bank accounts that we own as Ghanaians. So if you're a Ghanaian here and you have a bank account in the UK, most likely by now you'd have received a letter from the GRA. I know so many people who have received their letters as I speak to you today. They'll write a very friendly letter to you to say, oh, we are aware you have bank accounts here and here and here. We are giving you the chance to come and voluntarily disclose, come and tell us yourself that, oh, I own this property in Dubai, I'm making rental income on this amount, on that. I have not received any yet because I don't have any, at least to the best of my knowledge. Maybe I have an account somewhere, I don't know, right? To the best of my knowledge, I have no foreign accounts. I've not received that assessment yet. But just to go back to your point that people owe taxes they don't know, because many Ghanaians were not aware that once you are a Ghanaian resident taxpayer, your income, wherever you are earning it, is taxable here in Ghana. Do you know what it takes to be resident? Just be a citizen of Ghana, have a Ghana card, or have a Ghana passport, and be in Ghana at least one day during any year. You are automatically resident for tax purposes. So the bar for breaking residence is very high. For you to be non-resident, leave Ghana for a full year and don't step here that year. If you come here for even 1 second, you become tax resident again if you are a citizen with a Ghana card. So you can only throw your Ghana card away, renounce your citizen, right? That's the only way to dodge this. But once you have a Ghanaian Ghana card or a passport, you are automatically resident unless typically other examples are there. But at our level, you stay outside Ghana for the full calendar year. So any of us here with foreign bank accounts, foreign investment, you should have by now received a letter from the GRA inviting you to come and self-declare, come and self-disclose. If your letter has not come yet, maybe your money is very small, they are dealing with their big accounts, they'll come to you very soon, right? But yeah, that's something that's happening as we speak today.
Well, if there was a doubt, I guess you all are not seeing me until 2026, keeping this income away from Ghana then. Anyway, that's quite enlightening. This is stuff that I've never heard before, and I'm sure people are wondering. So maybe you just tuned in and you're wondering what we are talking about. We are talking about taxes. The idea is just to get an overview of why we are taxed, how we are taxed, what qualifies as being taxed. That way, whenever you're engaging in any economic activity, you need to ask yourself if this would raise any tax liabilities for you. If you are thinking about doing a side hustle, doing your own business, think about the tax implications and how it will affect your profitability. So hope people are picking up something useful in this conversation. Let's share it. Every now and then it comes up, people are like, I'm an influencer. Why is the government coming to tax this? Why is the government coming to tax that? Well, you're hearing it from Michael today. Everything is to be taxed except if exempted. So it sounds like guilty until proven innocent, right? So speaking of things that come up that people wonder if are taxed, let's just have it on the record. A few business activities that people do. In fact, a major one. I have people asking me on the side, Michael. So when they do the bets and their odds fall through, or it works out for them, should they be paying taxes?
Okay, so for those involved in sports betting, I'm not a football fan, so I don't know who is winning what, right? But let's say you are into sports betting. There's something in tax called a final tax, a final withholding tax. Thankfully, your sports betting winnings are final. When the government takes their 10%, that is it. It ends there. You don't owe anything to GRA again. So let's say you decide to stake for Liverpool, Real Madrid, whoever, and they win. You get your 20 odds or 200 odds or whatever. Or you follow NOK here, right? And then you get your odds going through. Once the government takes their tax on your winnings, you are done with GRA for that particular income. they don't want to hear from you again about filing a return, incorporating that amount. So once again, I'll go to, in tax, we like lists a lot. There are so many lists, right? So there's a specific list of items that are like that. The dividend you mentioned is like that. It's also a final tax. Once you get your income comes to you, the person paying you takes their tax. That is it. So if you are into sports betting here, you don't have any problem. Once the betting company takes the amount after they are paying you, like once they are paying you, they take the tax. That's it. You don't owe JR anything on that income again. Assuming that's the only income you make during the year, right? You don't have any obligation for that particular income item. It's a final tax, just like dividend. Or let's say you are here, you teach on a part-time basis. Also for that, it will attract a 10% tax. It's a final tax. So some of you here, maybe you teach part-time University of Ghana, you go and teach part-time here, part-time here, part-time here. Your earnings are also going to be taxed at 10% final tax. It means that you don't have any obligation for that part-time teaching income specifically. Again, once the person paying you takes the tax, right? So it depends on the side gig you are doing. Some of them are final, some are not. But I have general advice for those who run businesses here. There's something in tax, in fact, in business called deduction. Many people don't take advantage of deductions, right? I don't know who is here. I can't see the full list, but I'll say it anyways. The tax laws are written to favor business owners and not employees. I'll repeat that in case it flew over your head. So the tax laws are written to favor businesses. In fact, every tax code generally, globally, favors businesses and not employees. Here, employees, you pay tax before you spend. So let's say your salary is 25,000 cedis gross. Your employer takes taxes, maybe comes to like 4,000, 5,000 cedis. They pay you 20K net. It is that 20K net you go home to spend, right? So it was earn, tax, and then spend. You earn, you pay the tax, and then you spend. Businesses are in a very advantageous position. They earn, they get to spend whatever they want, and then whatever is left is what they pay tax on. It's something that tax laws have written. When I say whatever they want, it doesn't mean you can spend on just anything. You can't go and take your girlfriend to a resort or take her to Dubai and deduct from your business expense. The tax man will add it back. But there are legitimate expenses. You bought fuel for the company car. Yes, you get to deduct the fuel expense from your income because you pay income tax on your profit, not your revenue. The employee pays income tax on their, in quotes, revenue. I know employees don't have revenue, but yeah, that's how the laws are written. So it's a funny way to put it, but our tax laws everywhere in the world favor business. If you've listened to any of these motivational speakers, the rich dad, poor dads, they always advocate the tax laws are written to favor business because businesses get to pay tax after they have spent what we call expenses. But employees, unfortunately, you can't go and tell your employer that you have school fees to pay, so you should deduct the fees before you pay your tax. They take the tax, give it to government, and then you spend on your after-tax income, right? So that is just by the way. That once again, I was saying that to link the point to those who are influencers. If you're an influencer, you're a YouTuber, you have expenses. You buy internet to do your YouTube channel. I upload YouTube videos myself. It takes a lot of data to upload videos, right? So all that data bundle, buy it, keep records, keep the receipt. You get to deduct all of those expenses from your YouTube income and you pay tax on your profit. If you're an influencer, you have to go and buy, I know these days everybody's working around a ring light, right? You buy a ring light. It's a business ring light. You get to deduct it before you pay tax on your profit. So government is not coming for your revenue. If you are an online shop, you need a dispatch rider to deliver goods for you. Assuming you pay the rider, you get to deduct how much you pay the rider. You get to deduct the cost of your goods. It's your profits that are taxable. So businesses should not feel like government is coming for all the money they are making. Just make sure you have well-documented records. Get an accountant to help you with keeping records, right? The salaries you pay, even your utility bills. The place you are doing your business, if you have to pay, it's not your home and you have an office space. If you pay your ECG, it takes you 1,000 cedis a month. It's a deductible expenditure from your business. So over the year, like 12,000 cedis, so 1,000 per month, you get to deduct that 12,000 cedis from your revenue and you pay tax on what is left. right? So let's take advantage of deductions if you're a business person here. And whatever you do, if it's a business, that's why I said go and register the business. Because you then get the chance to say, okay, I spent these things in the course of doing this business, right? So influencers here, register the brand. Do your activities as that business. Don't do it as you, right? There are so many things you could do around tax planning, but that's one way to minimize the tax obligation. If you are an influencer, a YouTuber, the camera you bought for the channel, you can't deduct the cost of the camera instantly. There's something called capital allowance. You spread it over a number of years, right? But the computers you buy, the cars for the business, fuel, ECG, utility bills, your salaries for your employees, they are all deductible before you pay tax on the profits. That is income tax specifically, right? I hope that's a tip that will help the influencers, the self-employed persons, all of you here. Hopefully that's a good tip that will help.
Speaking of influencing, please like and subscribe. So, Michael, you mentioned something that like tax planning is something that people don't think about. We could plan for our business. And the question then becomes, who do we go to for tax help or helping to plan our taxes? Do you offer tax assistance to people?
As tax law GH, no. As Michael, yes. So
Okay.
yeah. So feel free to reach out. And the other consult, let me put some of them on there. Samuel, I see Thelma, I see has Princess dropped off. I have a number of my students here. I mean, you could reach out to anyone, but yeah, you can reach out to me. If I don't have the time to do it, I'll just pass it on to someone, right? But there are so many qualified professionals out there who can help you put your business affairs in order. Now, the thing about compliance and advisory I've seen in Ghana is Ghanaian business owners don't like paying for services. I mean, these services, but I'll come back to bite you. I see the lawyers on the TL always say, if you're going to buy land and you don't pay the lawyer today, you pay the lawyer later, right? Yeah, it's the same in tax. If you don't get your tax affairs in order today, that your business is small, when the business becomes big and people are following your account and GRA gets to notice you, they come after you, and by then it's too late because you are owing like 5 years worth of taxes. That can wipe away all the money you think you have today. So start well, start right, get the right advice, and be willing to pay for services. If you think it's too expensive, shop around, right? But I know accountants don't charge as high as a lawyer, so don't be afraid to approach any accountant for planning. Now, specific planning, I can't give specific plan advice here because no two businesses will be the same, right? But what I'll say is just know that there are some particular businesses that have specific incentives. For example, just by being 35 years of age and lower, if you are on this particular space and you're 35 or lower, and you are in certain particular businesses, you already have an incentive waiting for you, just don't know. It's called the Young Entrepreneurs Incentive, right? Your first 5 years, you can enjoy no tax at all. See, so these are things I think we also need to educate people. It's not for every industry, by the way. Let's say you are into manufacturing, right? Or you do some ICT stuff. So you do these, you develop mobile apps, you do software development, right? All of these things are areas that encourage people to go into. You see, so there are different incentives available for different businesses. If you want to go into manufacturing, you want to make you want to use, let's say, leather to make belts, to make shoes, to make different accessories, it will qualify as manufacturing. Where you decide to site your factory is a big factor. If you place your factory here in Accra or Tema, right, your tax rate is 25%. If you go to Kumasi, it's a regional capital, it might dip to 18.75%. But Kumasi and where, give me a town not far from, let's say in Tonso, right? It's not Kumasi, but it's in Ashanti region. Your tax will drop to 12.5%. Same region, but where you cited your factory made a lot of difference. So the tax law has all of these provisions, but you don't know and you're not utilizing it because you're not willing to speak to someone who knows, right? So I advise you to speak to a consultant. They can really help you. Not just me. If you're not an accountant, any friend of yours, just ask them to shop around. I know you can't pay for the big names. So speak to the accountants on the TL. They should be able to assist you with advice. But yeah, the example I gave on planning, you can see where you chose to site your factory alone could save you so much in taxes. 25% and 12.5% is like a 50% discount, roughly. Just because you put your factory not in a regional capital, but far away in the same region, for example. So these are things you can think about. If you go to, let's say you are in I don't know too much. Let's say you go to the Volta region, right? I don't know all the towns, but like you go to Hohoi, right? Or you go to a different part of Volta, that is not a regional capital. Your tax rate would be 12.5% compared to 18.75 in the regional capital, right? So you should know that the tax law has different provisions for different businesses, but it's all about knowledge. The Bible even says, "For lack of knowledge, my people would perish." So I think it's about not knowing and not closing that knowledge gap. But yeah, for tax planning, there are so many things you could do to get your affairs in order. Yeah.
There's so much information. There's really so much information. And so I encourage people, pay for services of professionals and follow Tax Law GH. There's a lot of information you can gain there. Today has been a lot of information to get all at
I think
once.
on
But you
the
can always,
there's
sure,
so
Michael,
much
go ahead.
information. All these things I'm saying, these are things we spent years to learn. So the accountant here will tell you they wrote their exam, some didn't pass the first time, they wrote again. So it's sounding so much to you because we learned it for so many years in school. So Thelma, Samuel, I see Sadiq on the call as well. I mean, it takes years to get this knowledge. So pay your accountant friends. Don't go for free advice, right? I'll not be surprised. Let me even check my DM. I said it, right? Message request. Like, pay people for services. Be willing to pay. It's something of value you'd get, right? And I think you should get your money's worth. Obviously, shop around, right? Because don't just go to any accountant. Find a qualified accountant with a proven track record who can help your business. And I think you get your money's worth.
That's great. So do follow us. If you've not followed Tax Law GH, do that right now. Follow Money Convos. At Money Convos, we talk about personal finance, like the way we are just having a nice leisurely conversation with a friend about something to do with our money. We do this once a week on Wednesdays at 6:30 p.m. GMT. And if you want to take it a step further, because no two people are the same, just as no two businesses are the same, your personal finance situation will be different from your sisters, your brothers, your work colleagues. So just because something worked for them may not work for you. So you need a friend. You need someone who can help you, someone who is knowledgeable, someone who think about your unique situation. And for that, I'd say get on Instagram, look up at investment_friend. That's investment friend. And there we go beyond just talking about general things. We look at your personal situation and see what we can do to help you get to your financial goals. We also have a community there. There are challenges, savings challenges, many activities just to keep you striving towards your financial goals. And if this conversation has been quite a lot for you to take all at once, you can go play it back here on Twitter later. Wherever you listen to podcasts, just search for Money Convos. On YouTube, you can look up Money Convos, subscribe, tell other people about this. It's good if we all know about this kind of information so that we can all be financially independent in a few years to come. But if you are the only one who is getting this information and you're keeping it to yourself, people would come depending on you. People will come borrowing and they don't pay you back. But why not help people learn these things so that they can do it for themselves? So please do spread the word. So to wrap it up, Michael, I'll come to you in a moment again about any final words. But for me, a final word I would really like to hear from you is on, with taxation, in Ghana, we get a general sense that those of us in the formal sector are paying most of the taxes, at least among individuals, not the businesses. But among individuals, those in the formal sector are paying because our employers are taking all the money. First question is, if my employer on my paycheck is showing that they are taking these monies out, but for some reason they are not paying that money to GRA, will I be liable when GRA comes calling?
Okay, so on that, I'll say yes and no, but the yes is bigger. No, the no is bigger. And let me explain. So those taxes are on account. When I say on account, your employer is paying your taxes for you. So by the time the year ends, on the 30th of April every year, all of us here are supposed to file a personal income tax return unless you had no tax payable for the year. So let's say you are here, you were fully unemployed, you were as broke as a church right, during the year, you had no income, then you are exempt from this conversation. But once you had an income generating activity, a job, a side business, whatever, you were supposed to file a return on the 30th of April this year. Now, if you didn't do it, just to deviate a little bit, that day you owe GI 500 Ghana cedis in penalty. Every single day that passes, 10 cedis has gone to add to it. So the first day was 500, 510, 520, 530, 540, 550 Ghana cedis. Count till today is what? 17 July. Do the math. Everybody here, if you didn't file a return on 30th April. But the question is, we are not at a point yet where GR is chasing everybody, because in tax, there's something called economy in collection of taxes. If the cost to come and chase you for that 500 cedis plus will be more than the tax you pay, they'd rather leave you to bring yourself, right? So back to your initial question, should you be liable? Those taxes your employer withheld or took from your salary, they were supposed to be on account for you, so that at year end, when you're going to file your final return, if you had other sources of income, you would add all those incomes. Say that, oh, for this 200,000 cedis in taxes, my employer has already paid. This is my top-up tax for my business or investment I made during the year. The challenge is, if your employer took the taxes and didn't give it to GRA, those taxes will not be in GRA system as being credited to you. So you see why I say yes and no? So now you go to pay your tax on your side gig, and you notice that you actually owe employee tax or employment taxes because your employer did not pay to GRA. So it is really also your duty to at least ensure your employer is paying. For SNIT, if you don't contribute a few months, they'll come chasing the company. GRA will typically not do until there's an audit or the company is big and then the liability is growing, right? So you have a duty to ensure your taxes that are taken from your salary are paid. Because when it's time to file your return, you will not see those taxes there because GRA does not have those taxes paid on your behalf. But see it like you have a duty to ensure your employer is giving those monies to GRA 15 days after every month ends, right? If you're in the finance team, you probably know what is happening. But those who are not in the finance team, your company on the 15th day of every month, unless it falls on a weekend or a holiday, they have to remit something to GRA called employee taxes or pay as you earn taxes, right? So it is the employer's primary responsibility. During an audit, they will be liable for not paying, but indirectly, you too need those taxes paid so that when it's time to file your annual return or your annual income tax return, you have those taxes credited to you, right? So it goes both ways, but the employer is the one primarily responsible for making payments of those taxes to GRA, not you.
Okay, got it.
Yeah.
So it's half your responsibility. All right. And the other end of this is, so we are taking care of the brunt of the taxes that individuals pay. What is the GRA doing to increase enforcement, increase compliance, to make other people also pay their fair share of tax? And I ask this just because people are suffering, and I would struggle to tell people to go and be paying all these taxes. Everyone will be looking at me some sideways. But at least maybe this can give some people hope that, okay, eventually everyone will be paying their fair share, so they'll be fine.
Okay, so on compliance and enforcement, the GRA is doing well. I mean, these days they are doing well. But there's one thing, and I don't know who is listening, so I'll just be careful here, right? But they could do better. And the reason is simple. I'll give you an example, right? So go to your favorite barber or hairdressing salon for the ladies. There are some barbering shops in Ghana that charge north of 100 cedis per haircut. But do you know even the largest barbering salons are required to pay 35 Ghana cedis per quarter as what we call the income tax stamp on a quarterly basis? It is not their final tax. That is all they are supposed to at least pay to keep their business running. Year end, they are supposed to file their return, pay whatever they have to pay in addition to whatever they paid on account. But my point is, if the lawmakers are so lenient on somebody who makes, if you want him to pay 35 cedis for a 3-month period, he makes that 35 cedis in like less than one haircut, right? Because one haircut, I don't know any place in Ghana that charges 35, or in my area. Let me be clear, I don't know. So nobody takes 35 cents for a haircut in my area. It's all above this. So they can use one haircut to cover their tax stamp for the quarter. right? I went to see the barber, was it last week? And then he had received a letter from the GRA. The letter was saying he should come over so they have a conversation, not to bring him a tax bill, right? So they are trying to penetrate the informal sector, but are they doing well? Not really. The thing is, it's easier to collect taxes on you and I, employees, because your employer is paying you at the point of paying, deduct and bring it to me. But for those who do their own businesses, I think it's just I'll say it's a political will. It's not there to enforce something for them. Now, don't think it's a matter of the laws. We have the laws that can tax the informal sector. It's a matter of what? Enforcement, right? So GRA does not care as much about the market trader than they care about you, the employee. Now, that market trader can make 5,000 cedis in a day, but that's your net salary. But they are taxing you and not her. We are leaving her to come and pay when she wants to pay. She can choose not to pay. If she's in a different corner of Makola market, she's under the radar, she'll never be found out. And she can live her entire life paying no income tax, right? So it's a matter of the government doing more and being more conscious of the fact that we have a bigger informal sector out there that actually makes more money than you and I in the formal sector, right? So I'll say it's a matter of political will, really, right? Because many governments have come and gone. I'll not blame this government alone. I'll say all of them, right? They all come, and a lot of the policies are around companies, individuals. I mean, employees, those who can easily be identified. How about those who are online, right? You can actually run an Instagram shop. GRA will never know you exist, and you are making more money than 3 employees combined. They don't follow your account. They don't know you are selling. You can have a shop on GG and these online marketplaces. They don't know you exist. So you are good to go. You can cash out easily, right? But once you work with a company limited and somebody's paying your salary, then you can't dodge the taxes. So I think we need a more inclusive tax system. Go to the US. There's no way you can even make that money without paying tax. Your bank account is linked to everything. When you were opening that Instagram account, you had to enter a certain social security number, something. So, like, every activity is integrated. You are even going to rush to the IRS, as they call it in the US, to declare taxes, right? But Ghana, I expected the Ghana card to achieve that. I don't think it did, because it was supposed to link everything so that we know, okay, this account is linked to this bank account, this Momo number is linked to this Momo number. But yeah, we have a long way to go. But I think once we do, they would notice that there's a lot more money in the informal sector than in the formal sector. That's the painful truth. The budget numbers show it, right? If you look at the taxes from individuals, there's potential in the informal sector, but they're not just exploring it enough. So that's why I leave political will is the reason. That's why I'll leave that point. Yeah.
Okay. All right. Well, we hope this political will, this will to enforce will come soon because people are suffering. So they need to go faster. Okay. Thank you, Michael, so much for today's conversation. It's enlightened us about taxes in general, why we are taxed, what is taxed, and what is exempted. Effectively, my key takeaway from this is any activity is taxed except those that are exempted. So you need to check if your activity is exempted or not. Otherwise, get ready to pay bills. I know that I'm looking at a long list of debts that many of us owe. So let's hope enforcement would have a cutoff. And then when it's time to comply, we'll all be able to comply. Michael, do you have any closing words for our audience?
I'm wondering if you give them the chance to ask questions or it's not part of the agenda, just in case maybe we have a few follow-up questions.
Well, okay. Well, I didn't want to go way longer than an hour, but what I can do is I can open it up in the sense of send a DM to the Money Convos account, and I would read your question aloud to Michael. So if you have any questions, please just send a DM with a question, and we would take your questions. While we wait for that, do you have any more thoughts you want to share?
Yes, I'll just say I'm speaking to the business owners here, like people who run businesses, get your affairs in order. It's actually easier to comply than to not comply, right? And the way all systems are being linked, it's just a matter of time, right? So it's better to comply now, right? And what I have noticed is many tax offices are actually friendly. When I say friendly, come and pay something. You see, they want to feel like you are a conscious company or a conscious business trying to pay something. So go to GRA, file a certain return, right? You are going to pay your tax on a quarterly basis. It's called self-assessment. Pay something a quarter, right? Go and pay something. They would know that, okay, this person is serious about paying their taxes. It might not matter now until you want to win a certain government contract. You want to travel and you need something called a tax clearance certificate. You go to GRA for a TCC, they say you've not paid your taxes in 3 years, you've not filed your return, so you don't get a TCC. How do you get a visa? You want to travel from Ghana today, right? Compliance has its positives. I would say the cost of compliance or the cost of not complying, it's way more than if you choose to comply. So nobody's saying go and give all your money to GRA, right? There are smart tax plan alternatives around there you can take care of. If you're an employee, for example, I didn't touch on that, but I mean, it's a big conversation. So if you have a mortgage, right, and it's on your primary residence, do you know the interest on your mortgage is deductible? So you can actually have your employer reduce your tax liability to the extent of the interest you paid on your mortgage. If it's your only primary residence, right? You have the luxury to use it for just one property for your entire lifetime. So if you have a mortgage you are struggling to pay, at least you can use that to reduce your liability from your employment to an extent, right? So there are so many things you probably don't know about, but just try to find the right answer, speak to the right people, put your business affairs in order. If you want your business to grow, a time will come, you become very popular, GRA will hear of you, and they'll probably come after you. And with social media, it's become actually easier to find people, unless you want to hide, right? But some will do retweet your product, you do a Facebook ad, GRA will be like, oh, this guy exists. Then you get a letter from them, and then you have to pay tax. And maybe one funny one I'll just end with. As you are packaging, right? I know Accra is hot, but in your packaging, be careful because the tax man does not care whether it is packaging or real. Once you package, it is basis to assess you, right? The law is clear. Commissioner General reserves the right to assess you to tax based on any information available to her. We have a female Commissioner General now. So you post on X or Twitter that someone just gifted you a Range Rover. The Range Rover is not yours. No problem. They write a letter to you and say, come and pay gift tax on that Range Rover. Then you start explaining plenty that, oh, it was just a public show and all of that, right? So, I mean, so many things we do around us have tax implications. So let's just be measured in our moves. Accra is hot, so we can move under the radar. Even if it's really a gift, ask yourself, do you want to put it out there that GRA come for the gift tax, right? So yeah, you want to say, oh, anonymous person surprised me with this. If it's not really anonymous, you go and pay your own tax, right? So let's just be measured in our movements in this Accra. I think that's just what I'll end with. Maybe I hope someone has questions by now. We can take those. Yeah.
Oh, that's interesting. I can imagine people will start preparing their 25% of the value of a Range Rover to go and pay to the GRA. And if, in fact, an employment opportunity for the youth, you know, you were talking about economy, whether it would be economical to go chase after people. I think they can create a department of young people who are savvy on the internet to be coming up with lists of people doing business online, you know, so that they can track and have enough basis to assess people, grow all the money that we have, and hopefully improve our situation in the country. But anyway, wishful thinking, right? Yeah.
No, it's actually not. There's a department called the High Net Worth Unit in GRA as we speak today. So my point is, don't go and let them profile you as that if you are not. If you know you are earning your 2K a month, don't come and package on social, because they will just profile you as high net worth individual. Then you start getting invites to come for meetings and you don't have the money. So you now go there and tell them, oh, it was all for social media show. But you want to go through that, like, you just be hot for nothing, you see. So yeah, they are on social media with us. They have an X account as we speak. For all you know, they're probably listening here, right? Somebody from GR. So they are around us. Do honest business. Be honest in your dealings. If you come and brag online about money you didn't make, it is taxable. They can ask you to pay tax. They'll send you an assessment. You have to object to it. And it's a long process. So just don't do it. right? Unless you don't care about the implications. So yeah, the unit is there. You can see they've become very tech savvy, posting so many details on their X handle. They've become tech savvy, so they are following, they're watching all of us on social media as we speak.
Okay, that's good. So they're making some moves. You put my heart at peace a little. Okay, so Michael, thank you. There are no questions coming through that I haven't already asked. So guess we could release our audience to follow us here, follow Tax Law GA, follow Money Convos, also get on Instagram and follow investment_friend, and you can get all the assistance you need. And thank you once again, Michael, for making the time. Thank you to our audience, everyone here, making the time to listen to us. We hope to catch you same time next week for another conversation about personal finance, investments, and just general self-development. I wish you all a good night. Do take care. Bye.
All right, good night. Bye.
Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse, and Facebook. And subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.